So, are you looking at 2025 and feeling just a little bit uncertain about where the markets are headed? Yeah, you're definitely not alone. It seems like investors everywhere are looking for new ways to grow their money and, protect it. So today, let's dive deep into one of the biggest answers to that uncertainty, the world of alternative investments.
Welcome to the channel Alternative Investment. With interest rates doing their dance and inflation still hanging around, it's no surprise that traditional stocks and bonds feel, well, a little unpredictable, right? And that's exactly why you're hearing more and more buzz around a completely different class of assets.
All right, so to really get our heads around this, we're going to break it all down into 5 simple parts. First, we'll look at the big market puzzle everyone's trying to solve. Then, we'll nail down what alternative investments even means. We'll explore some popular options, check out how tech is shaking everything up, and finally, we'll get real about the risks versus the rewards. So let's start with the big why. Why is everybody suddenly so interested in alternatives? Well, it pretty much all boils down to that feeling of uncertainty that's kind of hanging over the financial world right now. Think about it like a 1-2 punch. That stubborn inflation is quietly eating away at your stock market returns. At the same time, all the movement in interest rates is making the bond market, which is supposed to be your safe harbor, feel a lot more volatile. So when both of your main pillars feel a little shaky, you naturally start looking for something else, something that doesn't just move in lockstep with the public markets.
So, if the old playbook feels a little shaky, what's the answer? Well, for a growing number of people, the answer lies in this fascinating world of alternative investments. It's basically everything that exists beyond the usual suspects of stocks and bonds.
And honestly, the definition is as simple as it sounds. An alternative investment is really just any asset that isn't a stock, a bond, or your everyday mutual fund. Now, that's a huge umbrella, but the key idea, the thing to remember, is that these assets often play by their own set of rules.
And this just lays it out so clearly. On the left, you've got the stuff we all know, right? Stocks, bonds, cash. But then look to the right. A whole other universe opens up. We're talking about tangible things like real estate or private credit, private equity, even fine art, collectibles, commodities, and massive infrastructure projects. It is a much, much bigger sandbox to play in.
Now, to really grasp how huge this shift is, you've got to see the numbers. Let's rewind the clock to 2014. Back then, the entire global market for alternatives was sitting at around $7 trillion. I mean, that's a massive number, for sure, but trust me, it's just the beginning of the story. Okay, now let's fast forward to today. By 2024, that number exploded to over $18 trillion. Think about that. It more than doubled in just 10 years. That tells you there has been a massive, massive flow of money into this space.
But here is the real kicker. The projections show this market hitting almost $29 trillion by 2029. So this isn't just some passing fad or a blip on the radar. What we're seeing is a fundamental, long-term change in how investors are choosing to build wealth.
Okay, so these big numbers are great, but what are we actually talking about here? What do these investments look like in the real world? Let's zoom in on a couple of really popular examples to make it all a bit more real.
First up, let's talk about private credit. The simplest way to think about it is this. You're essentially becoming the bank. It's all about lending money directly to companies, completely bypassing the public markets. And because big banks have become a lot stricter with their lending, this massive opportunity has opened up for private investors to step in and fill that gap.
And the market size shows it. It's already over $1.5 trillion. Now, investors in this space love what are called non-cyclical businesses. That's just a fancy way of saying companies that aren't really affected by the economy's mood swings. Think software companies or insurance providers. People in businesses need those things whether the economy is booming or busting, which means they have steady cash flow. And that makes them really reliable borrowers.
All right, now for an alternative that probably feels a lot more familiar to most of us, good old real estate. It's a classic for a reason, right? For ages, it's been the go-to for investors who want income, long-term growth, and, this is a big one, a solid hedge against inflation.
The demand for property just stays incredibly strong, but what's really the game changer now is access. Thanks to new platforms, you can now have fractional ownership. It means you don't have to buy a whole building, you can just buy a piece of one. And that opens the door to everything from rental apartments to massive modern assets like data centers.
And that whole idea of fractional ownership is the perfect lead-in to our next big point. Because technology isn't just changing how we invest in these things, it's completely revolutionizing the assets themselves. This is where it gets really futuristic.
The magic word here is tokenization. It's all about taking these traditionally illiquid assets, things that are hard to sell, like a painting or an entire office building, and making them liquid. Tokenization is the tech that can digitally slice up ownership of that building into tiny tradable pieces, unlocking its value for way more people.
So, how does this magic actually work? Well, it's surprisingly simple. Step 1, you take a real-world asset, let's say that office building. Step 2, you divide its legal ownership into thousands or even millions of digital tokens on a blockchain, which is just a super secure digital ledger. And step 3, now investors can buy and sell those tokens on a marketplace, almost like shares of a stock. It's a technology that creates liquidity where there was none before. It's a total game changer.
Okay, this all sounds pretty amazing, right? But let's be real for a second. With all this opportunity, we absolutely have to have a clear-eyed look at the challenges. No investment is a sure thing, so it's so important to understand both sides of the coin here.
And this lays it out perfectly. On the plus side, you get the very things investors are desperate for right now: true diversification, a real hedge against inflation, and new ways to find growth. But you can't ignore the risks. These aren't stocks. You can't just click sell and get your cash back tomorrow. And figuring out what an asset is really worth today can be tough. So a balanced, informed approach is absolutely everything.
Which really leaves us with one final, pretty fascinating question to think about. For so long, these kinds of assets were only for the big guys, the huge institutions. But as technology like tokenization keeps breaking down those walls, making these exclusive assets available to almost everyone, you've got to ask yourself, are we watching alternative investments become the new mainstream?